Hey traders, in this video I'm going to show you guys one of the perfect trade setups that I look for on a daily basis. And I'm going to walk you guys through a couple things that were really key, and hopefully you guys will take this and kind of run with it and understand what the trade is. It may take a couple times of watching this video of what this trade is, but it is a home run trade when all the things line up, and they do it usually once or twice a day. And I'm also going to show you how you could tell if it's potentially a false breakout. So we're looking for an edge in our trading, and this is going to really help you. So real quick, what is that trade? Well, it is the divergence with market structure shift with a kickback, and we're going to talk all about that. So before we get into the video, do me a favor, hit the like button, also subscribe, and also make sure you guys check out my S&P EMA video trading course of my top 5 trading strategies, but also my S&P E-mini weekly trade zones. And now I have a Discord chat room where I'm doing daily trade zones. All of that for only $99, one-time payment. That's it. Let's get right into the video. Okay, so here we are in the chart, and let's take a look at this perfect trade setup. Like I said, if you could see these and identify them, they are such home run type of trades. I'll explain why, right? So the first thing is we have a trade zone right here, okay? And then we actually have a trend, right? We go a low, high, higher low, higher high, higher low, right? Kind of go sideways, higher high, higher low, right? We haven't broken the lows, so we're in a uptrend, higher high, higher high, higher high, right? Higher high, higher high. But then what does price do right here? We have what's called a displacement and a market structure shift, MSS, right? And essentially is what it's doing is it's shifting the market from being bullish to bearish with displacement candles, right? And so one of the things is we have the MACD down here, also with the histogram. If we actually draw, we see a high, pullback, higher high, but we see the divergence here. We see the divergence here. That all lines up, right? Then this is the key, is when we see this, if we pull back here and then we go high or higher and back up for the kickback, this whole move is what the kickback is, right? We see divergence, a pullback or a fall, right? And then a kickback to those levels. But here's the thing, because we took out this low right here, it literally shifted the market from being bullish to bearish. And so when we see this shift with a double divergence in a trade zone, we know we want to look to get short. In my video course, I talk about how to trade the divergence, and normally we want to look for wicks and highs and all that, wicks and bodies of candles, but we could see a good example of the kickback is it creates the right shoulder of a head and shoulders, right? So we have the shoulder up, pull back, the right shoulder, right? There's our head, and then a collapse. So one of the things that we're looking for in this trade setup right here is the kickback. So once we identify the market structure shift, okay, here with the displacement candle, we now want to watch for a kickback. Well, where could the kickback go? Well, this is where we now look at fair value gaps. It's a 3-candle pattern. Okay, usually you'll have a small candle, a big candle, and then another candle. It could be small or it could be big like this. But what the fair value gap is it's the space between the first candle and the third candle's high and low. So we could see this hot low, okay, And then this high never retraces to close the gap of that low, right? We just have a big down move, and that is what is called the displacement. So we're looking for a rally back up into this level. Here's our entry, and then we would just use above this high right here as our exit. And as far as when you see divergences with all of this, usually they lead to really big moves, okay? And look at the move that this had all the way down. We literally went from, if you entered 87, we'll say, the high was 89. Okay, you're literally, and maybe you go a couple ticks behind the high or above that high. You're looking at maybe 2.5 points, and this thing ran for over 50 points, almost 90 to 40, give or take. So yeah, good 50-point move off 2.5 points of risk if you held. Not saying you would, but it's just all these things that are combined into this lead to that. So again, watch for the high, a lower high, a high, higher low, higher high with divergence on the MACD, with divergence on the stochastic, with a market structure shift, and then we actually look for the kickback, maybe prior highs, right? Or prior wicks or bodies, something like right here, right? We have a body, wick, right? Things like that. And then if we actually have a trade zone that we kind of blew through or went to and then pulled back, that makes it even more powerful because we kind of scraped liquidity, because usually the trade zones I draw are actually trade zone the high of a move, right? So if we go above, we've now made a new high, but we've swept out liquidity. And if we have a big reversal with displacement candles, that is kind of the home run. So hopefully this helps, guys. Again, hopefully you guys will join my Discord chat room, right? You can buy everything, one-time payment, $99. I think it's the steal, just one trade itself will actually pay for itself and all that. So if you guys have any questions, leave them down below in the comments. But as always, thank you for watching, and we'll talk to you soon.